Happy Monday, my fellow degenerates, and of course, happy St. Patrick's Day. If you happen to have celebrated yesterday, well, I hope that your headache isn't too bad. And if you're celebrating today, I beg of you, please be safe with it all. Regardless, as you're sipping on your Pedialyte to get your life back together, we have a lot of things to talk about in this video. Of course, I'll be going over all the major things to pay attention to for the remainder of this week. I'll be going over the options breakdown, key levels, this, that, the other thing. But the most important thing we have to talk about is how a major bank is officially calling for the market to have an additional 7.5% sell-off from here, as in for trillions of dollars to once again just vanish from the entire system. I want to let you know what they're saying, their reasoning, and more importantly, where I think they're kind of right, but also where I think they're kind of wrong. So if that sounds good to you, don't forget to like, don't forget to subscribe. It really does help me out getting this video in front of other people who might care about degenerately gambling in the market. So with that being said, let's rock. By the time the world's largest casino officially closed on the day, here was the headline. Dow jumps 500 points, S&P 500 rises for second day as stocks try to rebound. I guess it's not just us that had the luck of the Irish, it was also the old stonk market. Yeah, there's a little bit of gray, a little bit of red, but mostly it is green across the board like the rest of the world. Here's from the White House, and it didn't just stop there. I guess they had McGregor talking. I thought this was a little bit funny. Just, supporting us all.
Happy Paddy's Day, America!
Happy Paddy Day indeed. The SPY officially gaining 0.77%, the Q's gaining 0.65%, you have volatility dropping, and you even have Bitcoin going up. So was it a perfect green day? Not really, but across the board, the bulls did win today. And even though it was a bit choppy in the morning, it was some beautiful setups if you knew what to look for, and man, oh man, did we crush it in the Discord. My real-time posted trades, not when I just got out. I'm not talking about Monday morning quarterbacking. I say, this is what I'm looking for, I'm getting in, this is what I'm gonna get out. All that posted. No Monday morning quarterbacking, making about $9,000. If you want to know exactly what I did, it was SPX calls. So I brought a group of 8, and then a little bit later on bought a group of 4, and then scaled out 4, 4, and 4. So I was in for around 36, and then got out at 40, 50, and then the final chunk was just a runner into the end of the day, officially exiting at 41.50. So a nice $9,000 return. If you're interested in this, if you want to trade with other like-minded people, join up with the Goonie Trading Discord. The first month is 100% free. Just make sure to put in that code Goonie. That's how you get full access to absolutely everything for an entire month. I really think you're going to enjoy it. Moving on, we got to talk about the big bank, Deutsche Bank. Now, apparently, they're calling for an additional 6% sell-off from where we are. And I had to redo the numbers because really what they're calling for, I looked into it, was for us to sell all the way down to 5,250, roughly where this is, all the way down here. From where we closed today, that wouldn't just be 6%. That's actually now clocking in around 7.4, which of course, if you do the math on the overall value of the market, that's trillions and trillions of dollars. Now, the TLDR here of why they think this is going to happen is because of the uncertainty of tariffs. Like, you feel free to read the article, but it's what in the world is going on with tariffs. And of course, we have an update there. Treasury Secretary Bessent says White House is heading off a guaranteed financial crisis. Basically, the argument is this: we're taking a little bit of pain now to fix an overall greater problem, because if we don't fix it now, it's actually going to grow to become an even worse problem. Then today we got even worse news, like just not really worse, but more pessimistic news, I guess is the best way to say it. Trump economic advisor Hassett warns of more uncertainty over tariffs. It's this word uncertainty of what in the world is going to go on that the markets in no way like. National Economic Council Director Kevin Hassett warned of quote unquote some uncertainty in the coming weeks related to President Donald Trump's tariff policies. But Hassett predicted that things will clear up when Trump administration implements its plan to impose quote unquote reciprocal tariffs next month. You need to do whatever you can, but remember the date, April 2nd. That is the date that this is all supposed to happen. That's the date you have to have marked down, and ideally, we're going to get more clarity on the overall situation. Trump and Treasury Secretary Scott Bessent have declined to rule out the possibility that the U.S. could enter a recession. This is the whole will we, won't we? At one point, we're saying definitively not going into a recession, and then other times we're saying, well, maybe it will happen, maybe it won't happen. I think it's inaccurate for anyone in the administration right now to be saying there's no way we're going into a recession, when in fact some of you would think that we already are in it, and there's some fair points. But just to say it's impossible, I mean, look at what's going on with the market and look at the fact that some people right now still think we're going to go down to the tune of trillions and trillions of dollars. Obviously, this is one of the many things going on right now that we would classify as uncertain. We're getting a bit more clarity. Trump trade chief pushes for order after rocky tariff rollout. Once again, it's the unknowns that are killing us. U.S. Trade Representative Greer is seeking to bring order to the upcoming announcement of new tariffs on April 2nd after previous announcement caused market uncertainty and confusion. You're kind of seeing the going theme here about, all right, as soon as we get clarity and everyone really knows what's happening, that's probably going to be very close to the bottoming point in this particular leg or journey of the market. With all of this being considered, of course, there's news related to this every single day, so use whatever your favorite source is, turn your notifications on your phone. But what you really need to know is the next big update is going to be closer to early April, but between now and then, there's a ton to pay attention to. So this morning we got the retail sales report coming in less than expected. So on the other side of the coin, you could argue that this is a bullish update because if retail sales are coming down, it also might indicate, because there's a high correlation, that inflation is coming down. And when we're talking about the inflation warrant, remember this Wednesday, 2 p.m., we get the FOMC decision. That's where the Fed and Jerome Powell and all of his buddies are going to be deciding what to do with the Fed fund rate. The result comes out at 2 p.m. and then Jerome Powell will be speaking at 2:30. As of now, as of the moment that I'm filming this, there's a 99% chance that we're not getting any change to the Fed fund rate. Not going up, not going down. We're staying perfectly constant. And if you look at the market, you're actually going to realize they're not even expecting a change in May of this year. And the first time that there's legitimate odds, better chances than not, that we get some sort of change, as in a rate cut. That's actually at the mid-June meeting. So basically, in the short term, don't be holding your breath on this. But this is another piece of uncertainty, especially this week, because on Wednesday, not only are we all curious what Jerome Powell's going to say, but that's also the day that volatility is expiring in the options market. And then don't forget, this Friday is going to be the OPEX. It's the quarterly end, which means there's a lot of different things. It's quadruple witching. There's a ton going down. Speaking of options, wild stuff happened today. Today could literally be split in two different parts. When we opened up, there was a bit of strength, but really it was just nothing. It was kind of a grind to the downside, just nothing. And then everything roughly changed around 1 p.m. And you could see that perfectly was because of the options market. We were grinding down. And then right here around 1:30, the options market came alive and we popped and we made new intraday highs, hit that key level on SPX of 5,700. And because it was such a key open interest level, that's exactly where we found resistance. And then we had a little bit of a sell-off and a close. More specifically, no one was touching puts today. This was all call driven, but that cannot be said the same about the Mag 7. So when I say the Mag 7, I'm referring to Apple, Amazon, Google, Meta, Microsoft, Nvidia, and Tesla, 7 of the biggest, most popular stocks that have a huge influence on the overall market. Wildly different situation. The movement today in the Mag 7 of why we had weakness at the start of the day was because there was so much call selling, but then all day there was puts closing out. So calls were getting sold, puts were getting sold, and that just completely opposite of the overall market. So I wanted to point out that discrepancy, but I also wanted to point out another strange thing we saw related to the world of volatility. What we're seeing right now over the past couple weeks is people were punting into YOLO out of the money calls on volatility, specifically VIX. And remember, that's commonly inversely related to the S&P 500. So if people are aggressively betting that the VIX is going up, it's pretty equivalent of saying, oh, we think the market's going to go down. So this has been the tune for the past couple of weeks, but recently we're actually seeing that calm down. Going into the expiration this Wednesday, we're seeing that aggression in the out of the money calls on volatility really come down, which makes me think that, okay, maybe Deutsche Bank is right that we're going to get a bit of a fall, but apparently it's not going to be coming anytime soon just because the options market isn't supporting it. If we look at the overall market, we're seeing a situation where Monday, Tuesday, Wednesday, Thursday, the first 4 days of this week are all call dominated, and they also have positive gamma. It's really, really difficult to have a dramatic sell-off in that type of environment. Obviously, I'm leaving out Friday, OPEX, quad witching, because that's completely different. It's negative gamma. There's a lot of puts. But for the first portion of this week, when we have just clear bullishness for the first time in a while, I just doubt we're going to have a sell-off, especially what we're seeing in volatility. So I thought it was weird how the Mag 7 acted today, but according to the options market, yes, we could easily have a sell-off later this week, but throughout the week, it's simply not how things are structured. Now, looking in the very short term of what might be going down tomorrow, I do want to let you know I give out the seasonality for free Tuesday, March 18th. I hope you're watching this in time because it's actually one of the strongest individual days of the entire year. Over the past 27 years, the bulls have won this day 67% of the time, as in they have a 17% edge, and the profit factor is a sky-high $7. This is a look at the hypothetical equity curve you would have if you bought at open, sold at close on the S&P 500 futures market. It's just bottom left, top right type of rocket stuff. So I do want to let you know going into tomorrow, we're seeing this combination of call dominated, where gamma's going positive, we're seeing volatility calm down, and seasonally it's very bullish. I truly do believe the first half of this week is going to be bullish, but then that's when it all changes. That is 100% when it all changes, because we have the uncertainty of tariffs. We don't know what Powell's going to say on Wednesday. We have no idea what's going on with quadruple witching on Friday, which once again is put dominated with negative gamma. And we have other uncertainty, such as what's going on with the ceasefire. Russia says Putin to talk to Trump as U.S. urges Ukraine truce. So coming into today, we had some commentary from the president. I'm talking about Trump, not the one from Russia, but basically they're both saying, yeah, we think we're going to talk. And then Trump actually followed up and did confirm, Trump, I will speak with Putin tomorrow morning, as in Tuesday morning. So this is a binary event. Either it's going to go well, and that's going to be bullish for the market in the short term, or they're going to start fighting and they're going to talk on each other, and it's going to be negative, and then we turn. So here, I don't think this is something we could really model in the markets. It's just exclusively a binary event. It's flipping a coin. Either it's going to go well and the market could pop, or it's not going to go well and the market could drop. So this is another piece of uncertainty, which over the past couple of videos I made truly does feel like just the word that I keep saying over and over and over again. But I want to let you know, based on the option structure of the overall market, the Mag 7, and on volatility, I don't think the bottom's it. I think Deutsche Bank is right to say that there's going to be a bit more pain that has to be had, especially from all the puts from this Friday with quadruple witching, and also the puts of next Friday to conclude the month, which are the puts associated with the JP Morgan collar. So I think sometime between late this week and early April, that's where we're going to see the quote unquote real bottom. And then from there, as soon as all that negative delta just literally decays out of the system, that's what's going to most likely be setting up the springboard effect, where we go up and we'll probably be witnessing what's referred to as the Vanna rally. So I have not changed my tune here. I still think there's a bit more bearishness in the system, but my one little caveat here is the fact that we don't know how tariffs are going to break. So if everything calms down there, I think April could be even more bullish than I'm anticipating. But of course, that's just another binary event. So I wanted to put all this stuff on everyone's radar. Yes, we had a little bit of a bullish day. I think we're going to get a bit of a continuation, but please be careful going into the end of this week and next week. And then from there, I think the bulls might be going on parade. Now, obviously, if you have any questions, comments, concerns, let me know in a comment below. I'll do my best to get back to all of you. Other than that, I appreciate your time. I appreciate the good vibes, and I'll catch you in the next one. Peace.